If you're over 65 and you rent your home, I need you to stop scrolling for the next few minutes, because almost every video about the money seniors are owed has quietly left you out. Watch any of them. Read any of the articles. It's homeowners this, homeowners that. Property tax freeze, homestead exemption, home equity. And if you rent, you sit there and you think, well, none of that is for me. I don't own a thing, so I must be out of luck. That is exactly what they are counting on you to believe. Because there are at least 5 separate payments and benefits sitting there right now with your name on them that you qualify for as a renter. And the people whose job it is to hand them out are never going to knock on your door and tell you. Stay with me all the way to the end, because the 5th one is the biggest of the whole list. It's worth more than $2,000 a year, every year, and you don't have to own a single square foot of anything to claim it. Let me be straight with you first about who this is actually for, because I don't want you switching this off thinking it's meant for somebody else. This is not only for people scraping by on almost nothing, and it is not only for folks with a little cushion in the bank. Both of those assumptions are wrong, and both of them cost real renters real money every year. A couple of these have income limits, a couple have none at all. The only way to know which ones fit your life is to hear all 5 of them. By the time we're done, you'll know the name of every program, the exact office or form to go to, and roughly what it's worth to you. Now, I'm not a lawyer, and I'm not a tax preparer. I can't sit at your kitchen table and run your personal numbers. What I can do is walk you right up to the door and tell you exactly what to ask for once you're standing in front of it. And do me one small favor while you listen. Drop a comment and tell me which state you're renting in, because 2 of these change depending on where you live, and I like seeing where everybody's tuning in from. Let's start with the one almost every renter has been told, to their face, that they can't have: property tax relief. Number 1 is your state's renter's credit. In a lot of places it goes by an odd little name, the circuit breaker. Here's the part nobody bothers to explain to renters. When you write that rent check every month, a large chunk of it is your landlord's property tax. You are already paying property tax. You just pay it through your rent instead of straight to the county. And plenty of states know this perfectly well. So they built something called a circuit breaker credit, and it treats a slice of your yearly rent as if it were property tax you paid directly. Because honestly, it basically is. Let me give you real numbers, not vague promises. In Massachusetts, a senior renter can claim a credit worth up to $2,730. The state lets you count a quarter of your annual rent as property tax for the math. In Missouri, renters 65 and up can get as much as $750 back. Colorado, up to $1,000 for a single filer. Vermont climbs all the way to $2,500. This isn't a discount coupon. This is a check, or a credit against your state taxes, coming back to you, the renter, for property tax you've been paying inside your rent this whole time and never knew it. Now here's the catch, and it's the exact reason so few people ever see this money. In most states, it is not automatic. You have to file for it, usually with your state tax return. And here's the trap. Even if your income is so low that you don't normally file taxes at all, that's where it slips away. People think, I don't file a return, so there's nothing here for me, and they walk away from hundreds, sometimes thousands of dollars. Go to your state's Department of Revenue website and search 2 words, renter and circuit breaker, or property tax credit. Ask for it by name. Which brings me to number 2, and this one keeps your lights on and your heat running through the winter. It's called LIHEAP. That stands for the Low Income Home Energy Assistance Program, and in plain English, it's help paying your electric, your gas, your heating oil. Ask most renters about it and they'll wave it off as a homeowner thing. Wrong again. You qualify as a renter whether you pay the utility company directly or whether your heat is just baked into your monthly rent. Depending on your state and how hard the winter bites, a LIHEAP grant usually runs somewhere between $200 and $1,000. Some states pay out more in a brutal cold snap. And here's a piece built specifically for people like you. If you hit a crisis, the power's about to be cut, the tank's running dry, most states run an emergency track that moves a lot faster than the regular line. You apply through your state or local energy assistance office. Often that's a single phone call. And this isn't a once-in-a-lifetime thing. It comes back around every single heating season, so it's money you can pull down year after year after year. That takes us to number 3, and I'll be honest with you, this is the smallest dollar figure on the whole list. But it is the easiest one to get, and it shaves your bill every single month without fail. It's called Lifeline. Federal program, been around for decades, and it knocks up to $9.25 off your phone or your internet bill every month. Now I can already hear it. $9. That's no jackpot. But hold on. That's over $110 a year, every year, for filling out one form one time. Stretch that across 10 years, and it's more than $1,100. And here's the sweet part. If you already get SNAP, or Medicaid, or SSI, you're automatically in. You don't have to prove your income all over again. For a senior on a fixed budget, keeping a phone connected to your doctor, to your kids, to 911 in the middle of the night, for that kind of money off, that counts. You sign up at lifelinesupport.org, or you call and ask them to mail you a paper form. One benefit per household, and you just renew it once a year. Now, number 4 is food, and I need you to forget everything you think you already know about this one, because a bad piece of advice keeps costing seniors a fortune. It's SNAP, food assistance, what folks used to call food stamps. Here's why so many renters over 65 skip it. They ask about it, and somebody, a neighbor, a caseworker in a hurry, tells them, "Oh, at your income, you'll only get the minimum, $23 a month. It's not worth the paperwork." And they believe it, and they walk away. I keep seeing the same story in my comments over and over, and it makes me want to reach through the screen, because it is flat wrong. Here's what they never tell you. There's a special rule for anybody 60 and older. You get to deduct your out-of-pocket medical costs, anything above $35 a month, right off your income before they ever calculate your benefit, your Medicare premiums. Your prescriptions, your co-pays, your dental bills, your eyeglasses, your hearing aids, all of it comes off the top. And when it does, the income they count drops, and your food benefit climbs, often far, far above that $23 figure somebody scared you with. On top of that, seniors don't face the same gross income test younger applicants do. So the very person who was told, "You'll only get $23 a month," walks in, claims the medical deduction, and walks back out with a real benefit, sometimes $100, $200 a month of grocery money. Call your county human services or social services office and use these exact words: SNAP and the medical expense deduction for people over 60. If the person across the desk doesn't bring it up, you bring it up. And that carries us to number 5, the big one. The one I told you at the very start to wait for. For most people, this single program is worth more than the other 4 put together, and I promise you, almost no renter I talk to has ever even heard its name. It's called a Medicare Savings Program. Here is what it does. If you're on Medicare, you are paying a Part B premium right now. In 2026, that premium is $202.90 every month. And for most people, it gets pulled straight out of your Social Security check before the money ever lands in your account. You feel that it's gone. You just never see it leave. A Medicare Savings Program pays that premium for you, the whole thing. That is $202 put back into your Social Security check every single month, more than $2,400 a year for the rest of your life. Let me say that number again, slowly. Over $2,400 a year. And the top tier of it, the one they call QMB, doesn't even stop at the premium. It picks up your Part B deductible and your co-pays and your co-insurance too. Now this one does have income limits, and let me give you 2026's real lines so you can find yourself. For a single person in most states, the top tier sits around $1,350 a month in income. But here's what people get wrong. They see that first number, figure they're over it, and quit. Don't. There are higher tiers stacked above it, one called SLMB and another called QI, and they stretch that income limit up further and still pay your entire Part B premium. So even if you're a couple $100 over that first line, you may still land squarely inside this. You apply through your state Medicaid office and you ask for the Medicare Savings Program by name. In a lot of states now, they won't even look at your savings. If you do nothing else on this whole list, nothing. This is the one you chase first. So let me stack these up for you, because when you see the whole pile at once, the number gets serious. The renter's circuit breaker credit, up to $1,000 or more, depending on your state. LIHEAP, a few hundred to $1,000 a year knocked off your energy. Lifeline, $110 a year off your phone. SNAP, real grocery money every month once that medical deduction goes in. And the Medicare Savings Program, over $2,400 a year, plus your copays on top of that. For a lot of renters listening to me right now, that is $4,000, $5,000, even $6,000 a year you're leaving in a government account. Because somebody somewhere let you believe the good stuff was only for people who own their home. Roll that over 10 years and you're talking about tens of thousands of dollars. And I want to be clear, this is not a handout, not $1 of it. Every bit of it is money you already earned through a program you already qualify for, sitting in an account waiting on one form and one phone call from you. Here's what genuinely bothers me about all of this. The renters who actually collect all five, they're not smarter than you, they're not luckier than you, they just happened to find out these programs existed. That's the whole difference. That's it. Nobody in an office is going to phone you up out of kindness. The letter is not in the mail. You have to walk over and go get it. So here's your plan. Start with number 5, the Medicare Savings Program, because it's the biggest. Call your state Medicaid office this week, not next month. Then chase your state's renter's credit, then LIHEAP, then SNAP with that medical deduction, then Lifeline for the easy win. Write those 5 names down on the back of an envelope right now if you have to. And do one real thing for me. You know somebody, a neighbor down the hall, a sister, a friend from church, who rents, who's past 65, and who's absolutely convinced none of this applies to them. Send them this video. It might honestly be the most valuable thing you hand them all year. If it helped you, take 1 second and tap that like button. It genuinely helps me get this in front of more seniors who've been left out. And subscribe, because next time I'm walking through the benefits nobody ever tells widows and widowers about. One last thing before you go. Tell me down in the comments, which of these 5 did you already know about, and which one was brand new to you? I read every one of them. And if you'd like, I've put together a free 1-page checklist with all 5 programs on it, the office to call for each, and the exact words to ask for, so you can carry it with you. I'll tell you where to grab it. Don't leave your money sitting in their account for one more winter. Go get what's yours.